Oliver, if you don't mind, I want to look at our livestock summary that we had from last week and just kind of recap where we were on the cash cattle trade. We had the trade range basically on live cattle about 123 to 124. It seemed like the vast majority of trade hovered around 124 last week. The dress basis sales were out in the plains about 193. I believe I saw some 192 maybe for an absolute low, up to 200. And I believe the majority of trade was more like around 196. Overall, wouldn't you consider that to still be stuck in that same range we've been in for over a month?
Yeah, the cash market on the cattle side has definitely been a big rut, but hopefully we can continue to see some slaughter numbers pick up and we can chew through the cattle and get the cash price working north. As far as the technicals go and the fund positioning goes, I think there's some pretty good upside. We bumped up against the 100-day moving average last week, just above that 131 mark and taking a little bit of a breather. I wouldn't be surprised to see the market pull back to 128 and a half to 129. That was kind of a secondary breakout point over the last week. If we can defend that, I think we're starting to mark higher lows and higher highs. Now, as far as the managed money position goes, the funds added about 10,000 contracts to the long side last week, putting them net long just about 35,000 contracts. And when you look at kind of the broader context of what that means is, sure, they're long, but this is a very neutral position, 35,000 contracts. It's not surprising to see them get upwards towards 70,000 contracts in a bullish scenario. So if we can get a bullish fundamental catalyst, i.e. cash working higher, the funds have powder to add to the upside. And if we're able to get that fundamental catalyst to give us a technical breakout, I wouldn't be surprised to see this market potentially go back and retest some of those highs that we saw just a few months ago.